Be Wealthy and Smart, episode 1565.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the AI boom widens the wealth gap. Now, this is an interesting article from CNBC. I thought it was a unique perspective. I'm not sure I agree with all of it, but it does have some interesting points that we should all think about. And it says, U.S. stocks have been on a tear in recent years, largely on the back of euphoria around artificial intelligence. But not everyone has participated in the run-up. Stock wealth has largely accrued to the wealthiest U.S. households. Even with recent choppiness, the S&P 500 U.S. stock index is up about 16% over the past year. Total wealth from publicly traded stocks has risen by $8 trillion or so during that time, said Mark Zandi, chief economist at Moody's. The top 20% wealthiest U.S. households own nearly 93% of all stock, meaning they get the lion's share of any stock market gains, according to calculations by Edward Nathan Wolfe, an economics professor at New York University who studies income and wealth distribution. He said stock ownership is still heavily concentrated amongst the rich, the very rich, in fact, and poor families have basically been left out of the picture. As the stock market goes up, it really widens the wealth and income gap. It's a big part of the inequality story. Of course, this isn't to suggest that AI is the lone reason the stock market has risen or that it alone is the source of the U.S. wealth gap, but it exacerbates other tensions at play and has implications for politics and the broad U.S. economy, Zandi said. For one, a widening gulf between the haves and have-nots could create more political fracturing, making it harder to reach consensus, he said. They have different needs and perspectives and therefore policy desires. You can feel it in our politics today, even in our ability to keep the government open. The dynamic also fuels a bifurcation in spending, he said. The U.S. economy is more reliant on the spending of a relatively small group, the wealthy, leaving it more vulnerable if something were not to stick to script for that group. The top 1% owned half, or $25.6 trillion of the total $51.2 trillion of corporate stock and mutual fund shares in the second quarter of 2025, according to the most recent Federal Reserve data. The average person in the top 1% has almost $37 million in net assets, Wolfe said. Meanwhile, the bottom 50% of households collectively held just 1%, or $540 billion, of that stock and mutual fund wealth. That's a huge, huge gap, said John Sablehouse, Senior Fellow of Economic Studies at the Urban Brookings Tax Policy Center and a former research official at the Board of Governors of the Federal Reserve System. Stock ownership is very low at the bottom of the income distribution, he said. Much of stock's growth is attributable to the so-called AI boom. The stocks of companies tied to artificial intelligence have accounted for roughly 75% of S&P 500 returns since ChatGPT launched in November 2022, wrote Michael Sembolis, chairman of market and investment strategy for JP Morgan Asset Management. AI stocks have gone stratospheric over the last 3 years, Andy said. Even when lower wealth households have stock, their holdings are relatively small. For example, about a fifth of the poorest 20% of households own stock, he said, but just 5% own $10,000 or more, compared to nearly all of the richest households. Wolfe analyzed data from the Federal Reserve's Triennial Survey of Consumer Finances. The analysis includes direct stock ownership, as well as stock held indirectly in sources like workplace retirement plans. Households with less wealth don't have the resources to save, and so can't afford to buy as much stock, according to financial experts. Meanwhile, the wealthy have more discretionary income and financial resources and can afford to take more risk with their savings and investments, they said. Despite the AI-driven stock market boom, the wealth gap has actually decreased for the middle class relative to the richest households due to a run-up in housing prices, Wolf said. The housing market, at least until recently, has been booming, he said. For example, the 50th to 90th percentiles by wealth own about half, or $23 trillion of total real estate, according to Fed data. Overall stock ownership among lower earners has increased slightly in recent years, a dynamic that tends to happen when stocks perform well, said Sablehouse, citing Fed data. There's also been a push to make it easier for consumers of all wealth levels to invest, as apps and certain investments have lowered the barrier to entry. So I'll stop there. Obviously, this is fact-based and backed up by data, so it's interesting data points. But I think what they're not calculating in is the younger generation really enjoys investing in crypto, and crypto returns have been much higher than stock market returns. In my recent analysis of our last 5 years of investing in crypto, I determined that 1 year invested in crypto is equal to 6 years invested in stocks, because the returns are 6 times better. It will be interesting to see, now that Wall Street is getting involved in crypto, if they see the kind of eye-popping returns that we've had over the last 5 years, and if those continue, we're going to see a lot more money flow into crypto and not into the stock market, and that may even out some of this wealth disparity with younger people. It's not going to be from real estate, and it's not going to be from stocks. It's going to be from crypto, in my opinion, where the future wealth comes. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.